Hi, my name is Ron Forley. The very reason that you are viewing this article is that you're probably interested in real estate and the financial freedom that comes with it. But do you want to be an investor or developer? As an architect, I prefer the latter as it is creative and the development of new ideas are limitless. You don't have to be an architect to be a developer. In fact, you do not need a tertiary education. However, if you are deciding a career path in property development, there are some critical steps to consider. So, do you want to be a property developer? Here are the 8 critical steps. Before we go into the 8 steps, let us look at the property industry. The industry is one of opportunity for those who are prepared to take the time to acquire the knowledge and willing to take the risk. It is not a business that will reward those who act impulsively or who operate purely on gut feeling. Some profits are made by luck, but those who depend on luck alone often find themselves failing in the future. It is a risky business, with the stakes placed fairly high compared to other ventures. However, with high risk comes higher rewards. So if you have decided to become a property developer, have you considered what it takes to be successful? Answer the following questions honestly, as it will help to define your values. Are you willing to face the challenges? Do you have entrepreneurial skills? Are you prepared to take the risk? Do you have a keen interest in property? Do you enjoy negotiating and making deals? Do you have leadership or management skills? And are you creative and a lateral thinker? If most of your answers are affirmative, then you are in a position and have the right attitude to tackle this rewarding industry. Let us now look at the 8 critical steps. Step number 1, educate yourself. Property development requires a certain level of knowledge in finance, economics, valuation, and how to run a business. The best way to learn about property development is to read about it. There are many articles, magazines, and books that cover the area of property development, which you can learn from. Enroll in a course or two. Although many property developers today enter the field without qualifications, most developers have acquired at least a bachelor's degree in finance, economics, or just taking a real estate course. When looking at doing courses, only select the best ones. It would be advantageous to secure an internship with a development company to learn about the business. Even though there are no formal education requirements, many development companies seek potential candidates with an experience or master's in business administration, or at the very least, a bachelor's degree in business, civil engineering, or management. A word of caution: there are many courses on property development by so-called experts. However, before spending any money on these courses, it is advisable to check out the promoters and whether they are qualified or have the practical experience in property development. So beware of spruikers who promise the world but deliver very little. Step number 2, talk to trustworthy professionals. Reading and studying about property development is excellent if you want to learn about the theory. But if you're going to speed up your knowledge process, there is nothing better than speaking to people who work in the industry, especially seasoned developers. However, it is not easy to find developers who are willing to speak to you. And even if they do have the time, do they really know you? Other avenues of accessing professionals are to speak to people who work in the industry, such as builders, real estate agents, etc. Join online forums or chat rooms, and attend networking functions. Talk to professionals such as architects, engineers, lawyers, accountants who are involved in the industry. Step number 3, understand the development process. The property development process requires an extensive planning with attention to detail. To ensure the smooth process, a development project must be managed correctly to minimize risk. This area of understanding is quite extensive, which is covered in the various books I've written. However, below is a summary of the process in various stages. Project vision. Before starting a project, you need to have a vision of your project and the outcome when completed. Finding a site. Finding the right site in the right location is one of the most critical steps in the development process. Due diligence. This step is where an extensive study of the site is undertaken to minimize risk. Concept plans and feasibility study. Your design team will start preparing concept plans of the proposed development, and a preliminary feasibility study is undertaken. Purchasing of the site. If the pre-feasibility study proves that the project is viable, then an offer is made with conditions that you may feel necessary, such as finance approval. Development approval, or DA. If the offer to purchase the site is accepted, documentation is then prepared for development approval. Building approval. Once the DA has been granted, your consultants will prepare full documentation required for building a license and for tender purposes. The tender process. Selected builders are invited to submit a tender price of your project. Marketing. Competent real estate agents and project marketers are appointed to market your project, if not earlier. Construction. During the construction, your architect or project manager will conduct regular site visits to oversee the construction stage to ensure that the highest quality is achieved. Completion. To sell or to hold, depending on your investment strategy. Once your project is completed, the property can either be handed over if sold, or if rented, for tenants to move in on an agreed lease terms. Step number 4, understand how finance works. As a property developer, it is vitally important to understand how the financing of your project works. This includes how lenders and banks think and what funding is required at each stage of the development process. When I started my career in property development, I read and found out all about finance. Even though I graduated as an architect, my course did not include finance or project funding. So the knowledge I have in development finance has been self-taught. Below are some basic loan types required at the various stages of your development. Land acquisition loan. This loan is to secure the purchase of a development site. Your track record and ability to secure the debt with collateral will weigh heavily on the lender's decision to provide this form of financing. Seed capital loan. Depending on your finances, seed capital may be required in the conceptual stage of your development. This initial stage is to cover such things as consultants and disbursements for the initial design and submission for DA. Construction loan. A construction loan generally operates as an interest-only drawdown facility to finance the building as required. Often the interest on construction loan is capitalized during the building period, with the entire loan, inclusive of the interest charge, being repaid upon the sale of the development and of the refinance of the residual debt. Also check the terms and conditions of these loans, as it may affect your decision to proceed with the lender or to look for another. Step number 5, research the property markets. Before you decide to tackle any development, it is vitally important that you research your market. Studying facts such as unemployment rate or other statistics will help your decisions. The following factors should be considered. supply and demand, economic factors, employment, consumer confidence and finance trends, medium property prices and capital growth, the market cycle, demographic data, disposable income, residents' needs, and location and close to amenities. These are very important factors to consider, and there's a lot more to look into when undertaking this research. Step number 6. Whether you intend doing property development part-time or full-time, it is sensible to have a property development business plan or strategy. However, before you can do this, you need to undertake a self-analysis. Especially if you are a novice developer, you should begin at the level that you will be comfortable with. You need to assess the following areas: your current net worth, that is assets minus all liabilities, your current borrowing from lending institutions, your time that you must look into potential developments, your time that you can manage these developments, your development strategy, that is to develop and sell or to develop and hold, and your preferred development type. After establishing your borrowing capacity and analyzing the time you can afford, you will be able to develop a plan to start the process. Your strategy should consider the points made earlier and the time to consider some type of development that you're most comfortable with and the level of return you desire. The table shown here summarizes the development characteristics of several residential types. This will assist you in choosing the development type suitable to your analyzed profile. For example, here we have renovations, which has a very low risk level. The financing is good, the expertise is low, the saleability is good. Whereas if you take land development, the risk profile is medium to high, the financing is average to difficult, the expertise required is medium to high, and the saleability depends on the type of use. Step 7. Gain experience. Most successful property developers gained experience with an established property development company before starting on their own. However, what if you cannot find a development company that will give you the opportunity to work in their office? Listed below are alternatives which, although not thorough, can assist you in gaining some form of experience. Become part of an investment group that focuses on development. If you are interested in property development but don't want to go it alone, you can join a group or a club or even start one of your own. Members will each give something to share or give advice on property-related matters. Join a development syndicate. Development syndicates is a vehicle where investors pool their money together to develop a property. Development professionals initiate these syndicates and then offer investors to participate. Besides gaining access to larger, higher quality investments with lower capital outlay, these syndicates are managed by a team of experienced professionals from which you can learn from. Hire a development manager to oversee and manage a project for you. This allows you to be an active part of the entire process and have the expertise of your development manager to complete the task competently. Development managers usually run the day-to-day details with you, and you are still able to have your say in the design, contractors, and act as the ultimate decision maker. When selecting a development manager, you should ensure they have the experience and knowledge in the type of project that you intend undertaking. Step 8. Find a mentor. A mentor is an experienced person who can provide invaluable guidance as you begin your development career. They can guide you through tricky situations and can help you grow your career. Below points out why it is important and helpful to have a mentor. Mentors have inside knowledge. As mentors are usually seniors in their field, they are aware of the fluctuations and market movements within the property industry and can advise you on professional courses and training programs. Mentors have experience and expertise. Mentors put a lot of time, money, and personal effort in building their careers, and they instinctively know what will and what will not work within a project or a strategy. They've learned from their mistakes, so you need to appreciate the feedback and learn from their mistakes. Mentors give professional advice. A mentor will provide you with unbiased, honest advice to help your career progression. They can help to refine your strengths and work out your weaknesses. As there is no emotional attachment, you know that the guidance that you receive is trustworthy. Mentors offer networking opportunities. The saying goes, it is not what you know, it is whom you know. With the years spent in the property industry, mentors have built up their professional network, which can help your career progression. Make sure you appreciate any information or connections that they give you, but do not rely solely on them, as some of these networks may be old and not in tune with the next generation. Thank you for listening to this article. I do hope that you have picked up some valuable tips. Please bear in mind that this is only a summary, and you'll find a lot more detailed information in the books I've written. On another note, and as pointed out earlier, under step 8, mentors in the property development industry are very difficult to find, as most of them are obviously very busy with their own projects. It is for this reason that I have, and upon the request of many past readers, developed 5 mentorship programs for both novice and seasoned developers who want to improve their skills and knowledge within this industry. These programs can be found through my company, AYR International, which are development managers, and by going into the website, look under the banner of mentorship. And thank you once again for taking the time.